72 hours from now, a single US government number is going to drop. And depending on what it says, Bitcoin could move 5 to 10% in either direction before the weekend. Most Canadian crypto investors have heard of this report but have no idea what it actually measures, how it flows through to your Coinbase Canada balance, or which way it's likely to go. I'm going to walk you through all three right now. I'm your crypto compass. Let's get your bearings. The report is called the PCE Inflation Index, Personal Consumption Expenditures, and it drops this Thursday, May 29th. It is the Federal Reserve's single preferred measure of inflation, which means it directly determines how likely the Fed is to cut interest rates in the coming months. And here's the chain that matters for your crypto. Rate cuts are bullish for Bitcoin. The fear of rate hikes is bearish. I'll explain exactly why that chain works, what analysts are forecasting Thursday's number to be, and what you, as a Canadian DCA investor, should actually do about it. Most Canadians are familiar with CPI, the Consumer Price Index, but the US Federal Reserve actually uses a different measure, PCE, Personal Consumption Expenditures. The key difference is that PCE adjusts for how people actually change their spending when prices rise. If steak gets expensive, people switch to chicken. PCE captures that substitution behavior. CPI doesn't. The Fed considers PCE a more accurate picture of real inflation pressure, which is why it anchors their interest rate decisions. This Thursday's report covers April 2026 spending data. Bank of America is forecasting headline PCE at plus 0.4% month over month, with core PCE, which strips out food and energy, at plus 0.3%. Those numbers matter because the Fed's official inflation target is 2% annually. Any reading above expectations signals that inflation is still running hot, which pushes rate cuts further away. Here is the mechanism that connects a Washington economic report to your Canadian crypto balance. It has 4 steps. And once you understand them, you'll see why macro data moves crypto faster than almost any other market. Step 1. PCE data comes in above expectations. That tells the Federal Reserve that inflation is still a problem, so rate cuts need to wait. Step 2. Investors reprice rate cut expectations to be further away. Step 3. U.S. Treasury bond yields rise because if the Fed holds rates higher for longer, government bonds become more attractive. Step 4. When bonds yield more, risk assets, stocks, real estate, and crypto become comparatively less attractive. Money shifts from risk into safety. Bitcoin sells off. Run the same chain in reverse for a soft PCE number. Rate cuts look closer. Bond yields ease. Risk assets rally. And Bitcoin can push higher. The reason this particular Thursday carries more weight than a typical PCE release is that Bitcoin has been consolidating in a tight range between 76 and 78,000 USD all week. After the Iran-driven flash crash earlier this month, the market is sitting right at a decision point. A hot PCE number is likely to push it lower. A soft number could be the catalyst for the next leg up toward 80,000. There is real directional tension sitting in that data release. Here is the detail that makes this particular week more volatile than a typical PCE week. A $6.25 billion Bitcoin options expiry is scheduled for the same time frame. Options expiry weeks tend to produce amplified price swings because large traders are actively managing their positions ahead of the settlement date. The combination of a major macro data release and a large options expiry in the same week is exactly the kind of setup that produces outsized moves in either direction. For beginners, you don't need to understand options mechanics to use this information. The practical takeaway is simple. If you typically feel anxious watching your balance move with the news cycle, this is the week to go for a walk instead of watching the chart. If this kind of breakdown is useful, Connecting us macro events to your actual Canadian crypto balance, subscribing is the best way to catch the next one. I do this every week for Canadians specifically, because most US-focused crypto channels don't translate these reports into what they mean in CAD or for accounts on Canadian exchanges. Here's the plain English version of what Thursday means for you, depending on how you invest. If you buy a fixed amount of Bitcoin on a set schedule, you don't need to change anything for Thursday. A dip triggered by a hot PCE reading is the same as every other dip in your DCA plan. Your scheduled purchase buys more Bitcoin at a lower price. That's the math working in your favor, not against you. Where Canadian investors tend to get hurt is in making large, unscheduled trades based on headlines. Historical data consistently shows that retail investors who sell on news events tend to miss the recovery. Bitcoin's rebounds from geopolitical and macro shocks in 2026 alone, Iran tensions, the Moody's downgrade, have been faster than almost anyone predicted at the time of the sell-off. If you want to follow along, the PCE report drops Thursday morning, US Eastern Time. A headline PCE number above 0.4% is the bearish scenario for crypto. A number below 0.3% is the bearish scenario for crypto. A number below 0.3% is the bearish scenario. Anything between those two figures is likely a non-event. The market will react within minutes, and that initial reaction will often overshoot, giving calmer investors a better entry point once the dust settles. The macro calendar sounds complicated, but it follows the same chain every time. Inflation data, rate expectations, bond yields, crypto. Once you understand those four links, you stop reacting to individual headlines and start seeing the pattern beneath them. Subscribe if this was useful. And if you want the other side of this week's story, I just published a complete guide on how to check whether your Canadian crypto exchange is still legally registered. After 47 firms lost their licenses in 2026, it's worth a 60-second check. That video is linked in the description. What would you most like to see next? More macro explainers like this, or more platform guides? Drop your vote in the comments.